Hey everybody, Ian Bremmer here, kicking off another week. Can you tell? Is it a Monday? Is it a weekend? Does it matter? I mean, look at the bright side. You don't have the Monday morning blues, right? I mean, if the weekend doesn't matter, then you can't complain as much about the work week. There's got to be upside to all this. Anyway, it is more coronavirus all the time. We're finally hearing here in New York that the opening of the economy in May 15 is really, he was talking about primarily upstate, really manufacturing and industry, and it's going to take longer to open things that affect the average person's day-to-day life. I mean, I think that one of the things that we consistently have been underplaying is just how long it's going to take to get to something that feels more like normal. I mean, first of all, and we've already seen this in Europe, getting industry moving again is important, but you know, manufacturing in the United States is a comparatively small piece of the economy. What you really need are people going out and consuming. You need services that are able to work again. And of course, you need the knowledge economy too. Well, the knowledge economy fortunately works. But the services where most people in America actually work, the average person, retail, clerks, driving, these are things that don't simply restart, not only because the government is going to be more cautious not to open them up until there's an adequate testing regime, but also because even when the government opens it up, the companies are going to be concerned about litigation. And even if the government provides some sort of emergency blanket saying the companies aren't going to get sued, the individuals aren't going to behave the way they used to. I mean, what is it going to take to get somebody to get on a plane, to go on a vacation or go on a business trip? Aren't you going to, at the very least, the bar for that is going to be higher. You're going to want it to be essential. Most travel that most people do is much more question of personal choice than it's absolutely critical, especially as our companies are getting more used to conducting all sorts of business by phone and by video. And so, you know, the same thing is going to be true in all sorts of entertainment and hospitality. I mean, we've already heard that to get sports going again for the foreseeable future, it's really not going to be about sports stadiums. It's going to be about what can you actually show on television. You have all of the sports stars, you know, basically locked up in group quarantine with regular tests, but they're not interacting with large groups of fans, and the fans aren't all out there in large numbers. Well, I mean, can restaurants run with 50% of their normal clientele plus some takeout and some delivery? Can taxi drivers make money with far fewer people that are prepared to actually get into their cabs on a daily basis? I mean, it's not like any of these were incredibly profitable to begin with. And can they increase their prices suitably to allow them to get to the point that they can make reasonable income when you have consumers across the board that themselves are doing worse? This banks, same thing. The banks are in much better situation than they were in 2008, 2009, in part because of the new regulations, greater credit that they have to keep, capital they have to keep online. They take less risk. But when they're not making money, I mean, when small businesses are not profitable and they're defaulting on their credit cards, and when consumers are much less capable of engaging in bank services and paying for them, at some point those start crashing too. So what worries me here is, I mean, I'm not an economist. It's not about how the economy is going. It's about the fact that our political leaders are going to need a much, much greater capacity and willingness to provide economic support, relief, before we get to stimulus, and then stimulus for a period of at least 2 to 3 years. And all the congressmen that I'm talking to right now in the House and the Senate, you know, they're thinking about hopefully being able to still be constructive through November, which is getting a lot harder because, in this environment, what you really want is lots of fast money. And if you make some mistakes and if it isn't all efficient, that's less important than just getting the cash out there in the economy actually working. And in the first few months, that's what we've basically done. That's going to be harder to do as we get to November. But really, I'm thinking about the longer term, the before we have a vaccine that works, but the economy still isn't functioning, and we've just done 20% debt to GDP in the United States. Are we prepared to do it again? What are the implications of that? What do we have to cut? What happens when state budgets start becoming much more constrained? They have to make cuts too. Their hands are out. And this sounds hard in the United States, much harder in Europe, which wasn't growing as fast before this crisis, doesn't have as much capacity after this crisis, and much less capacity to make the kind of debt mutualization, fiscal transfers, because those are across countries and individual governments. Some would have to change their laws to do that. Their people don't want to see it. It's incredibly unpopular, at least in the United States. I mean, if we have to give money from New York to go to Kentucky, we don't even really think about it that much. And it's not like, you're going to vote your New Yorker governor out because Kentucky's making more. That's not the way it works. In Europe, that is the way it works. And then it gets worse than that when you look at emerging markets, which themselves have much more economic difficulty. Their people are much closer to subsistence. The need for bailouts are much greater. The international support is likely going to be largely absent. And for those that are saying, well, China is going to do much better, they're the ones that are going to come in when the Americans and Europeans are focusing domestically. So far, the leaders of the financial institutions have been incredibly disappointed that China's not offering much at all. They're doing some very significant press campaigning saying how strong their economy is. Supposedly, as of right now, there are no more hospitalizations in Wuhan. Not sure I believe that at all, but they're leaning into the press. They're leaning into their communication strategy. And if they send out any free masks or ventilators, or much more likely they sell a whole bunch, they're making press around that too. The latter, of course, hardly a humanitarian effort. But the international bailout that's going to be necessary, the Chinese aren't going to be there at all. So, I really do believe that even though there's no global response, there's no coordination, there's no international leadership, the first 6 months of this crisis, in terms of the healthcare challenges, the human challenges, the need to get resources to make sure that we stop this peak of mortality and new cases from exploding to the moon, I think at the very least the advanced industrial economies and China are capable to respond to that effectively, and I think we're showing that. But I think what happens after that on the economic side, we're going to start to see the developed economies fall down. We're going to see the emerging markets with no capacity at all. And the dangers for me really aren't this summer. They're more about towards the end of the year next year, as some of those bills come to be paid, and as the challenges, the hardships that individual citizens are facing after being dislocated from an economy that we've shut down no longer has the ability to keep living, at least not in the way they used to. Look, it's not a good news story. I mean, I'm an upbeat person, and I want to be able, when doing these videos, talking together, I want to look at where we can move that's much more promising. How we can take lessons from this that will put human beings in a better place. And certainly there are stories like that. I mean, the fact that we now have massive collaboration around the world to work on treatments, and even to work on vaccines, and humanity will, in all likelihood, respond more effectively in that regard to this virus than anything we've seen in the history of humanity. That's a positive story. But when we think about the quality of human life coming out of this crisis, it's not really about winners and losers. There are companies that you can look at, certainly. There are sectors that will do better than others, right? I mean, anyone that's watching this on a smartphone or watching it through Zoom, those companies are doing very well. The tech sector is doing well. But countries and people as a whole, I mean, for the first time in our lifetimes, we can say that pretty much every country in the world is going to come out of this worse than they went into it. that the quality of life is actually going to go down for a while. A lot more people, emerging markets, you're going to talk about some submerging markets, and a lot of people that were joining the global middle class are going to be falling out of it. There's going to be more poverty, and more absolute poverty than there was before, more hunger than there was before. And I say that not to depress everyone. I say that rather because those of us that are in much more fortunate conditions, I think are going to have to push harder for policy solutions that really do recognize just how hard humanity is going to have it coming out of this. Life isn't going to look as easy, as comfortable, and if we're saying that in the advanced industrial economies, the majority of the planet is going to have a much harder time than that. So, kicking us off the week, something to chew on a little bit. I hope everyone's doing well, sheltering in place, being close to your loved ones, at least conceptually, and I'll talk to you all soon.